It's happening right now, right? You can see it on certain days, right?
Yeah.
We gap down 10% right before the end of the day. Well, why? Well, ETFs can only trade for a very small window at the end of the day.
Yusko begins by contextualizing the approval of the Bitcoin ETF, emphasizing its role as a retail product designed to cater to individual investors, particularly those whose assets are managed by financial advisors at major institutions. He highlights the sheer magnitude of assets under management within these platforms, pointing to the potential influx of funds into Bitcoin as a result of its adoption. Expanding on the impact of the Bitcoin ETF, Yusko delves into the dynamics of institutional adoption and market liquidity. He predicts that as more institutions allocate a percentage of their assets to Bitcoin, the overall market liquidity will increase, creating a more robust trading environment. However, Yusko acknowledges the possibility of market manipulation by institutional players seeking to accumulate Bitcoin at lower prices.
I actually never felt that the ETF was for the big institutions, right? It doesn't mean that they wouldn't use it, but ETF
it's a retail. It's a retail product.
Yeah, it's for the individual investor, and really what it was for was not the Robinhood crowd and not the meme coin traders and the day traders. It was for, again, it's a boomer wrapper. It's for the boomers whose money has been kind of abdicated to a financial advisor. And the financial advisor works at one of these big platforms, UBS, Merrill Lynch, etc. And that total dollars is about 30 odd trillion. It's a lot. And I kept saying that, look, once the ETF was approved, at a bare minimum, right away, 10 basis points was going in. So that's, about $30 billion. And we've had about half of that so far. It's pretty good in whatever it's been, 10, 12 weeks. And so that's pretty amazing. Now, 10 basis points is not where it's going to stay, because Fidelity already said 1 to 3% in their kind of fund of funds ETF that allocates to other ETFs. They said 1 to 3. And I think all these other places are going to say, 1%, that's a good number. That's a good diversifier. Well, 1% of 30 trillion is 300 billion. That's more money than has ever gone into Bitcoin since day one.
Yep.
Just let that sink in for a second. 300 billion is more fiat than has ever been converted into Bitcoin. And yes, Bitcoin's market cap today is 1.3 trillion, but 1.3 trillion didn't go in. It was a very small fraction of that, somewhere in the 200 something billion dollars. And the rest is appreciation, because every time money goes in, it's, to your point, 7,300 Bitcoin demanded and only 900 produced. Well, where's the other Bitcoin come from?
That's a big
Holders.
shift on the.
And the only way a holder sells is if the price moves.
That's right.
That's how markets work, right? Everybody's always, I love when people say, there's more buyers than sellers.
Same
No,
amount.
there's not. It's the same amount. There's always the same number of buyers and sellers. Now, the incremental dollar can come from buyers or sellers, but that incremental, like if you're a short seller and you're trying to, sell something that's overpriced, then in order for you to buy it back, you want the price to fall, right? That's
Right.
what you're expecting. If you're long, you're long an asset and someone wants to buy it from you, the only way they're going to get it is if they offer you more than you think it's worth. And so that incremental pressure, but once the transaction occurs, the number of buyers and sellers are exactly the same. It's happening right now, right? You can see it on certain days, right?
Yeah.
We gap down 10% right before the end of the day. Well, why? Well, ETFs can only trade for a very small window at the end of the day. They strike their NAV actually at 359 every day. And here's the crazy thing. All of the gains in the Bitcoin ETF occurred after hours. There's been zero price increase during the day from 9:30 to 4 every day for the last 3 months. No price increase. All of the price increase has occurred after hours. Well, why is that? Well, because again, if you have to buy a bunch of something, the oldest trick in the book, you don't actually start buying it. You actually sell it first. You actually might short it. You actually might spread rumors that it's a bad thing. I tell a story all the time. There's a famous trade that Julian Robertson put on in copper, and the analyst came in with this big analysis on all the copper they were going to buy. And he said, okay, good. I like it. Let's do it. He says, well, how much should I buy? He says, no, you don't buy any. You go short 50 million and you tell everyone we hate copper. Push the price down, then back up the truck and buy it at a lower price. So you can see this happening day in, day out. And I think that's going to continue to happen. And to your point, as the total asset base gets bigger, the ability for the big institutions to put big shorts on to push the price down so they can keep accumulating at a lower price. Absolutely. I think that's, and for the long term, that's okay, because what that does is it creates a more liquid market, a deeper market. Now, they're kind of stealing, the institutions are kind of stealing from the moms and pops who are trying to speculate, but speculating is hard. And I'm much more of a buy and hold kind of person. Like, if I like an asset, I want to own it. And then I'm going to own different assets in a portfolio on a diversified basis. And I'm going to rebalance on occasion. Trading is hard. Speculating is hard. So I try to, and trading's really hard when you're going up against people with superior knowledge and resources and tools. Like anyone trying to day trade stocks today, you're fighting Ken Griffin. And if you haven't watched the movie Dumb Money, watch the movie.
Citadel,
it's amazing. And the depictions of Ken and of Stevie, they're so good. I mean, they were a little uncharitable, but they were so good. And these guys, they have more resources, they have more knowledge, they have more tools. There's no way you win, except on a very rare occasion like GameStop. But even then, it was a short-term win, because long-term.
Yusko offers insights into price dynamics and market manipulation, drawing parallels with traditional trading strategies employed by institutional investors. He explains how the ETF's trading window at the end of the day has facilitated price increases after hours, highlighting the role of short selling and spreading rumors to drive down prices before accumulating assets at a discount. Yusko adopts a long-term perspective on Bitcoin's trajectory, cautioning against short-term speculation and emphasizing the importance of holding assets for extended periods. He traces Bitcoin's journey from its early stages as a speculative asset to its current status as digital gold, arguing that future price appreciation will require sustained growth over time.
I mean, is it the last big increase, like multiples? Kinda. And if you think about it, look, when it went from 0.003 cents to $1, that was a miracle, right? That was the miracle of Bitcoin, that it survived like the startup phase, the science experiment. Getting to $1 was the miracle. Then running from $1 to $10, that's amazing. 10 times your money. But then it fell 80%. Then it went from $2 to 300. Oh my gosh, 150 times. And then it fell to like 186 or something. Then it went to 1,000. And then it went back down to 200. And then it went to 20,000. And then it went back to 3,000. So going from 1,000 to 20,000, just math, right? 20,000 20 times is a lot harder than 1,000 to 20,000. And so from 68,000 to go up tenfold, I think it will happen, but but it's going to take much longer.
It won't be in this. Yeah, right.
It's going to take much longer. And look, people ask all the time, well, what's the ultimate end game? Well, let's just think about this. Bitcoin today is digital gold. Now, Michael Saylor wants you to say it's digital property. Ultimately, I believe that, right? Okay, today, it's digital gold. What is gold? Gold is money. Money is an asset that exists in the absence of a liability. Total, and this is where people make a mistake. They say, well, total market cap of gold is 12 trillion. So the equity market cap, we're going up 10x from here. Half of that gold doesn't count. It's jewelry and chalices and gold leaf on the Golden Dome, back there at Notre Dame. So no. So 6 trillion, that's 5x from here, in the bank. Making 5 times your money from here, in the bank. You can call me on it. Okay, so that's like 400K. Easy. I mean, like, super easy. Fine. Okay, but then beyond that, digital property. Now, digital property, real estate, is about an $86 trillion global asset class. Is it possible that Bitcoin is a better form of property? Like, think about it. The American dream post-World War II was what? Everybody buys a house, white picket fence, we take a mortgage, and we, make a ton of money. You bought a place in California when you came back from the war for $5,000. It's millions of dollars today. Glorious. Okay, what is that? That's just currency devaluation. The house didn't go up. The house didn't grow. You didn't start with a 2-bedroom house and it turned into a 20-bedroom house. It's still a 2-bedroom house in the middle of a neighborhood that may have deteriorated over 50 years.
Looking ahead, Yusko explores the concept of Bitcoin as digital property, drawing parallels with traditional real estate investments. He posits that Bitcoin's potential as a superior form of property could rival the $86 trillion global real estate market, presenting a compelling case for long-term investors seeking to diversify their portfolios. Please like and subscribe my channel.